I want to bring in Gregory Daco. He is Oxford Economics Chief U.S. Economist. So, Greg, let's take this vaccine news first, if we could, because as Miles alluded to, the market is taking this very enthusiastically here this morning. From an economic perspective, how enthusiastically are you taking it? And I would ask sort of the key question in my mind is, does vaccine trump stimulus? In other words, does this make stimulus not as necessary, or is the timeline such that we still really need it?
No, I think broadly speaking, we have to focus on the timing of such a health solution. We've always said that an economic recovery, a sustainable economic recovery, would be dependent on a strong health solution. And as we just heard, yes, the news is very encouraging, but before we get a broadly diffused health solution in the form of a vaccine, it's going to be another 7-8 months. And right now, the health situation is quite concerning, and the economic situation is also quite concerning in the absence of additional fiscal aid. So I think right now we should really be focusing from a policy perspective on delivering additional fiscal aid to households, businesses, and state and local governments.
Greg, under a scenario where a vaccine from multiple pharma companies next year gets distributed, what does GDP in the U.S. look like?
Right now, we're estimating GDP growth next year to be around 3.5%. That's little changed actually after the elections, because we expect that under a Biden administration, we're still going to have a Senate that's Republican. And in that environment, we're not likely to see Biden's fiscal agenda be developed, and we're likely to see more of a stamp from Biden being imposed via executive orders, executive actions. In that environment, that's still expected to be relatively moderate growth, again, coming out of this very deep hole that has been left by the COVID crisis. I don't think the vaccine, if it's developed around the middle of the year, really changes that picture that much, because that's been our underlying assumption for a few months now. Granted, the news is very good this morning from a market's perspective. We have to be very cautious that there are going to be ups and downs with vaccine developments over the coming months. And let's not forget, what's essential is the distribution of that vaccine, and that everybody takes it so that we actually get over this COVID crisis.
And I guess, Greg, related to that, I kind of hear you saying, and you have a great chart in your note showing how even in your most optimistic forecast, we're like barely back at trend growth by the middle of 2022. And is there a risk here, perhaps, that economic policy takes its eye off the ball, as it were, and doesn't focus on things like getting the unemployment rate back under 4%, getting GDP growth back on trend, if we become so enthused about the reopening of movie theaters and whichever restaurants haven't yet closed? I mean, there's still a very deep hole to climb out of over the next decade, not just the next 18 months.
That's my concern for the immediate future. It's that rear-view economics are quite alluring. We've seen a significant rebound in economic activity over the past few months, but momentum has slowed quite sharply. Our latest real-time data indicators are pointing to a real slowdown at this point of the year, and that's worrisome. Yes, the market news, again, is quite encouraging, but we still have some ways to go. As of the third quarter, there was still a 1/3 output loss relative to where we were back in April. Employment is still down 10 million jobs. We still have a lot of millions of people that are dependent on unemployment benefits, which are expiring, have expired. We're still dependent on a lot of aid for small businesses, a lot of aid to state and local governments. And the extension of benefits, which a lot of unemployed people have fallen into, that extension expires at the end of the year. So we're really looking at a critical period now where we need to have additional fiscal stimulus to sustain a strong recovery. Without that, it doesn't really matter if we get a vaccine in 6 months' time. The economy is going to suffer in the very near term, and that means people suffering and not being able to spend as they would normally do.
And then I guess, Greg, the natural follow-up would be, we're talking about fiscal, but of course, on the monetary side, we've heard from the Fed just last week, and they've been quite steadfast in how they see the situation evolving. But I can imagine that, let's say the end of next year, we're talking about 1.5% on the 10-year. We're talking about a steepening yield curve, all the dynamics that I think some hawks might look at and say, maybe the Fed will lose its conviction here. But do you see a Powell-led Fed changing their view on rates being at zero through 2023 as they've currently outlined?
No, I think that's most likely going to be the environment. Under the new flexible average inflation targeting framework, we're going to see a very dovish Fed for the foreseeable future. What the Fed may do actually in the very near term is actually contemplate additional actions. It doesn't have as much firepower as it did, but it can still prevent a rise in long-term yields, for instance, if that becomes a hindrance in terms of the interest rate sensitive sectors. It can also increase access to its different emergency lending programs, but really the ball right now lies in Congress's court, and they will have to deliver additional fiscal aid imminently to prevent quite a sharp slowdown by the end of the year and a very slow entrance into 2021, a year that we likely foresee as a policy gridlock year, which will not mean much additional fiscal stimulus going into 2021.
So if all of that is the case, Greg, are there any other measures that President-elect Biden could take once he takes office? Is there anything else you expect on the economic front that he's going to be able to accomplish?
Well, I think there are two elements that are quite important. The first one is policy certainty. We tend to underestimate uncertainty and the effect it can have on private sector action. But in effect, certainty in terms of what the outlook is from a policy perspective is quite beneficial to most businesses. And I think after the last 3.5 years, that will be a big plus. The other thing that could be positive is some reach across the aisle, perhaps increased collaboration between Republicans and Democrats to do the right thing for the economy. That might be a positive. Outside of that, it's likely going to be focused on executive actions, looking at trade, perhaps as a sign of goodwill, reversing some of the tariffs on China. But we know Biden is not a pure free trader, so that's unlikely to be a big game changer. Perhaps more of a pro-immigration stance, but again, that's not going to have an immediate strong effect on growth. So we're back to that fiscal stimulus question. Will we have a Congress that is going to deliver more fiscal stimulus in the near term? And sadly, the paradox here is that if markets are doing well, that might actually push policymakers to delay further fiscal action, assuming that markets represent the economy, which is not necessarily true.
Right. Interesting point. Thank you so much. Gregory Daco is Oxford Economics Chief U.S. Economist. And we are continuing to watch futures here push higher this morning on that Pfizer news. Pfizer and BioNTech, its German partner, announcing in a trial that they showed 90% efficacy in their coronavirus vaccine. So we'll keep tracking that news.